It's Wednesday the 2nd, I'm FX Plu and this is CurrencyTransfer.com's market update. So the main headlines are that the sterling fall has turned into a bit of a rout. The dollar rally continues to be strong and euro dollar has tested the 120 level. Even by currency market standards, which are pretty volatile at the best of times, sterling's recent change of fortune has been pretty spectacular. Only 2 weeks ago, cable touched new year highs, fueled by rate hike optimism and hopes that the breakthrough in the Brexit talk. Meanwhile, of course, the UK economy wasn't doing brilliantly, but it was performing okay and holding its own. Cut to yesterday when cable hit a new low of 135.88. And looking around, there are very few redeeming features in the market for sterling. What's caused this? Well, there's been a change of sentiment towards the dollar. Risk appetite has come back on since Syria, since the Korea talks and since trade talks in with China. Further, Bank of England Mark Carney has poured cold water on the rate hike idea for May, and of course the Irish border has come back into the crosshairs of the Brexit process. So even with all the headwinds facing sterling, it's also been caught up in the dollar rally that is driving the dollar to new highs. Charlie on the charts even points to a short-term target of around 134.60, which would be a new low for the year. Yesterday, indeed, the dollar index touched 92.57 and is holding strong there. Speculation is growing over Friday's non-farm payrolls. And suggestion is that the headline figure may even be as high as 300,000 new jobs created outside of the agricultural sector. But more importantly than that, is wage growth. It's expected to come in over 3%, and if we do see a reading that high, expectation is that a rate hike in the US will be all but confirmed for the July meeting. However, as I have ably demonstrated on many occasions, non-farm Friday is very hard to predict, and so the traders in the market are not getting too caught up in this, but rather potentially sitting on their hands and waiting for the data and reacting to that. We'll obviously be having the sweepstake on Friday, so think about where your number's going to be if you want to take part in that. I'm thinking slightly conservatively, maybe about the 280 figure at the moment. Meanwhile, euro dollar has fallen 4.6% since its mid-February high of 125.66. Yesterday we touched 119.80. We broke through the 120 level. It did come back over 120 overnight, but it has been crossed, a very psychologically important level there. Look, despite the inflationary pressures that a weak euro will have, the ECB is very unlikely to be concerned about this. Sterling euro, meanwhile, touched 113.35 as sterling was sold off aggressively. We will, of course, keep you posted throughout the day of any relevant developments. If you've got any questions, pop them in the comments below and we'll do our best to respond.